Steve Roman here, president of Global Atomic Corporation. Happy to be back in London with Matt Gordon.
Matt Gordon. That sounds good. You should do radio. Good. Welcome. Why are you here? Because like last time I spoke to you, you're in Niger.
Yes.
Blowing things up.
Yes.
And then you pop back home, and then you come back over for Mines and Money, and then you're going back to Niger.
That's right.
So
we're here for Mines and Money. We've got a lot of meetings lined up. Lots of excitement still in the uranium space.
Seems to be.
And then I'm heading back to Niger on Monday for a week. We've got a board meeting there. We're running through our budgets for next year.
Okay.
Having some meetings there with various officials.
Right.
So
well, that's the crux of it. Pardon the pun. But getting there, meeting the local officials, people from the ministry, etc., and of course you're going to building that big team up over there because things are happening on the ground operationally.
Oh, absolutely. Yeah. No, since our big blast, November 5th, the whole mining crew is there. They're on site. All the equipment's there. Mm-hmm. We're waiting for more supplies to come through the port in Agadez.
Yeah.
I mean, they've come now to Agadez. We're waiting for containers to arrive at site.
Yeah.
To really continue to ramp up and push the ramp down to the ore bodies.
How is that going? In terms of supply chains, right? They're kind of getting there, but it's still taking a little bit longer.
It's taking a little bit longer. I would say supply chains have been good from Cotonou to Agadez.
Right.
Agadez has been a bit slow with customs getting accustomed to us
doing some work,
moving large amounts of goods through there.
Right. Okay.
So I think that's all going to speed up as people are comfortable that everything is moving.
Okay. So let's kind of step back a bit and sort of take a look at what's going on at the moment. I was speaking with a North American uranium CEO yesterday. Give me a sense of what's happening in North America. Right. You guys, one of the most advanced development stories. It looks like you're moving swiftly through to a phase where you can get into production, and you're aiming for, remind everyone, date for
production by beginning of 2025.
Right. So not too far away, right?
No.
And to do that, money, which comes back to money.
Money.
You've got the annuity stream of cash coming through from on the zinc side of things.
Yes.
How are you viewing that in terms of being able to leverage that with regards to future financial requirements?
It's definitely a help. The banks like the fact we have a secondary source of cash flow coming in.
Yeah.
But on the banking side, we're now down to the short strokes with our two North American banks.
Right.
So the key thing from our point of view is to push the lawyers quickly as possible so that we can sign term sheets before the end of the year and announce the terms.
Right.
And then finish up all the paperwork in Q1.
Okay, those guys, before they dish out the cash, do like to go and do site visits. I'm never actually quite sure if they know what they're looking at, but so have they been to site?
All of their DD team has been to site.
Right.
The main guys are going in January now. I was actually going to be with them now in December.
Right.
But they've delayed that, so now we have mid-January. I'll be back there again with them. Mm-hmm. Which effectively, they've made the decision that they're proceeding. They want to send the main guys there to have a final look.
Right, and then they would sign.
Then, the paperwork, all the documentation takes about 3 months to complete.
Right. Okay. So as an ex-banker myself, there's a kind of process that you got to get through. Obviously.
So term sheets, we agree first. Yeah. Everybody's on side. Yeah. Then they send their guys there for the final look-see. Then we continue with the paperwork, get the lawyers working together to finish off the documentation.
Right.
Have that done by the end of Q1.
Okay. Money today, though, how are we doing?
Money today is fine. I mean, we announced we had 18 million on board end of Q3. Mm-hmm. That'll run us right into Q1 next year.
Right.
And then, the idea is that we'd get the banking terms announced and be able to calculate how much delta we will need there to top things up from an equity point of view.
Yeah.
We're speaking to MES funds and various other people that could provide a non-dilutive source. And that's what we're doing now. It's just seeing what the market's going to be like.
Okay. And can I come back to? I want to come back to Turkey because I think it's really important in terms of the optionality that you've got. I referred to it earlier as an annuity stream because it's a big, long, cash flowing thing, and you can borrow against that. huge multiples of it, usually. Or you can flip that asset and sell that. So you've got a bit of optionality about the way that you treat that. Where are you kind of leaning? Because I'm sort of intrigued, because it shows intent and kind of confidence of the uranium component by the way that you deal and treat the zinc component.
That's a good question. So the zinc component is clearly not the major asset in the company. It's nice to have the cash flow. It was a great business. It funded our Dasa development. But if it hadn't been for COVID, of course, and the steel mills being on a bit of a lower production profile, it would be worth a lot more.
Yeah.
So we have obviously the option to sell that asset in lieu of raising any more equity.
Right.
It depends on what the price is going to be.
Because
if the price isn't high enough for me and Matt, I don't want to sell it.
Of course not. But yet, at the same time, there's an arbitrage between what that capital release could do for your main asset, where I think expectation around pricing, so whether it be spot price or term price, whatever you want to value it by, different people have different views. There's that arbitrage between like, I'm not going to get quite as much here, but it could release a super amount of value over here. So
that's what we have to ascertain in Q1. Whether that's possible.
Interesting.
Yeah.
Okay. Interesting. Okay. So back on the ground, Niger. You're there next week, meeting a bunch of people. How's the hiring side of things going? Because you need the right people in place.
We have them all. We've
got
hired them all.
Done.
Yes.
Excellent.
Done.
Now in training mode.
Yes. As a matter of fact, we've started the training mode already. Right. So our Canadian contractor, CMAC, is there. We've got all of our new mining gear there. We've got the core team of Orano people that have moved to our site. We've been hiring locally, people down to 18 years of age. We've started now apprenticeship programs, training programs. We are letting people run around with the equipment on surface and showing them how to use it.
Yep.
Clearly, they're all excited because the equipment that they left in the old mine was old equipment.
Yeah.
This is state-of-the-art equipment. The training is well underway, and basically we've started our mining process.
That's because I think people don't put enough credit or give enough credit for the quality of the people that you've inherited. I think that's a really interesting thing, and the fact that they wanted those jobs. And you kind of stepped in there. So I think it's quite interesting. With regards to little things like the power of the dollar in Niger, has that kind of been working in your favor?
The power of the dollar.
Power of the dollar.
I don't know if that's had any impact.
Well, I don't know, because we've seen a few companies companies in different jurisdictions say, well, actually, do you know what? The exchange rate has really been working in our favor. We're getting a lot more bang for our buck.
Well, yeah, from that point of view, yes.
Yeah.
Yes.
Right, okay.
Yeah, and the euro has come down.
Yeah.
So our costs have come down.
Yeah.
And, from a point of view of building our plant, now we're sourcing a lot of materials locally.
Yeah.
We'll be able to keep the cost down. So we're still thinking we should be pretty good on our numbers targets going forward on the plant construction.
Right. And in terms of the kind of local empowerment type stuff, okay, I don't want to call it ESG because I'm kind of up to here on ESG for the last 18 months, okay? I'm trying to say, in the reality of doing business on the ground, you need the buy-in from people. I guess because of the big, long legacy and history of uranium production, no problems there, but you're having to kind of establish your own brand and personality on the ground too, aren't you?
Well, we definitely have to do that. And what people are used to is big state-owned company being Orano,
right,
running these mines.
Plus the French government in the background,
the French government. And what we have told them, and I was very specific in my speech at the opening, is we are not a state company. We are a private Canadian exploration and development company. So please don't confuse us with a big state enterprise.
Yeah.
We have a budget. We have to stick to a budget. Here's how many people we're hiring.
Yeah.
The big thing is educating everybody as to what is this project? How many people are you going to employ? How much you're going to spin out? How many jobs you're going to create?
Right.
So it's, we have to make sure that everyone is educated on those facts.
Also quite a good message for shareholders. You're looking after the bottom line. Like, I know you're in a rush. You got to get off. Thanks for making time for us.
Great to see you.
Here.
Thanks.
Good luck tomorrow. Good luck next week, rather, I should say.
Thank you very much. Yeah, we'll stay in touch.